What's up, family? This is your boy Ivan Hall, the Credit King. What is credit utilization? You might want to look at your utilization if you've ever had credit declined, even if you believed your credit score qualified you for approval. About 35% of your credit score is determined by your utilization, so even if your credit scores are good, you could still be turned down for credit if you have high use. Credit usage, expressed simply, is the percentage of your available credit limits that you are presently utilizing. You have a 50% usage rate if your credit limit is $10,000 and you've only used $5,000 of it. That is seen as heavy consumption and suggests to potential creditors that you may be a credit risk. What makes a high usage rate undesirable? You appear to be unable to cover your living expenditures without utilizing credit when you utilize so much of your credit. Lenders assume you are either living paycheck to paycheck or spending more than you are making if you have such a huge credit card load. Both ways, it sends the wrong message to potential lenders. That seems hazardous. Ideally, you want to have an overall usage rate of less than 10%, and most lenders want to see utilization rates around 30%. When your credit limit is low, even the simplest transactions might use up a significant portion of it, making this challenging. However, if you remember to pay off your balances exactly before each due date, as this is when your lenders report your balance to the credit agencies, you can still use your cards without the lenders seeing excessive use. The simplest solution would be to settle your loan. However, there are some more advice and techniques. You may, for instance, figure out when your statement ends each month and make a payment to get your debt below 10% before that time. Lenders will only be able to see the balance you have when your statement appears, even if you utilize the full amount of your credit limit. This is so that your lender only reports your balance to your credit record when your statement is actually issued. Since interest won't be applied until your statement is sent, it's wise to pay off your bills in full whenever you can. Paying in full will save you money and maintain a low utilization rate. Lenders naturally like to see low loan utilization rates. Carrying a little sum on one or two of your cards at once is okay, since they cannot make any money if they cannot charge you interest. The general rule of thumb is to keep your balances on no more than 2 cards at a time under 10% of your entire credit limit, and to keep your overall credit usage below 10%. By doing this, you will increase your credit score and make yourself appear less risky to lenders. Try requesting credit limit increases with some of your existing cards if you have a high usage rate and are unable to pay your debt down but need your credit score to raise for something like a credit application. Remember that before deciding whether or not to raise your limit, many lenders will pull your credit report. This pull may temporarily lower your credit score by a few points because a new hard inquiry will show up on your credit record. Although you will rapidly receive those points back, many lenders are equally cautious of inquiries. You can also be rejected if you receive too many queries in a short period of time. Before deciding whether or not to grant you a greater credit limit, you might phone your credit card provider and ask if they will check your credit. Inquire as to whether a light pull or a forceful pull will be used if they do an inquiry. Your credit score won't be impacted by a soft draw, and other lenders won't be able to tell that it was performed. When other lenders request a copy of your credit record, a strong pull will probably lower your score by 2 to 3 points. If you can raise your credit limit, you'll be able to reduce your total credit use rate, which should improve your credit score. Several variables will determine how much it increases, but in general, if there is a severe pull, it will counteract the decline in credit score. Just keep in mind that you won't have a matching decrease in use to counterbalance that pull if your lender performs a hard inquiry and decides not to extend your credit limit. You might seek a debt consolidation loan as a final resort if you want to fast reduce your usage. Your present credit card balances will be paid off and consolidated into a single monthly payment with the help of this loan, but you must make sure that the interest rate on the loan won't be greater than the interest you already pay on your credit cards. Finding a loan that won't report to your credit unless you default is also a smart option, because moving your debt to another loan won't reduce your total usage. For more credit tips, credit hacks, and credit repair secrets, subscribe to our YouTube channel or visit us online at thecreditking.com.